let's welcome in our next guest, Manpreet Gill, CIO of Africa, Middle East and Europe at Standard Chartered, who joins us right now on the show. Well, he's at the epicenter of it all, literally and figuratively. Manpreet, I hope all is well in Dubai.
Good morning. Yes, no, all well at our end. But obviously, as we wake up to Monday morning, I think the focus shifting away from just the region, of course, to the market impact as well. And you've seen that's something we've been thinking about a lot as well.
Yeah. So Manpreet, I read your note, right? And you clearly saying this, that watching oil prices closely, that's the first thing that came out on the note. And it's clear that that is the thing. Just the point that oil prices started off with a large flare up and then cooled off almost immediately, right? In a matter of 24 months, they lost nearly 60-65% of their peak of the last 24 to 48 hours. Is that telling you a story, or is it too early to call a story?
So I think it's partly about two factors here, right? I think one is, let's not forget that when you look at the pattern of oil prices, we've seen oil prices price in a bit of a risk premium very gradually since the start of the year. So we're not starting, our starting point has not been one of complete sort of non-pricing of the risks. So this has been building for some time. And second is, yes, at the moment, in a rapidly changing situation, I think there is obviously markets trying to achieve a balance between what the headlines sort of tell us from a geopolitical perspective and the fact that we're dealing with an oil market that is still very, very oversupplied at a global level. So obviously something we need to keep a close watch on. It's a situation that can change at short notice. But that is also why we're quite focused on thinking through different types of scenarios rather than reacting in too knee-jerk a manner. It's natural for a bit of sentiment-driven jump, but we have seen this before, in the middle of 2025 as well. So I think it's important to keep a bit of a balance and look at it with a cool head here.
Manpreet, good morning. Hiral on this side. We're talking about, a temporary surge in crude. Now, whether it sustains at higher levels or not is anyone's guess. But in case this is a temporary surge that we are seeing right now, what should the equity strategy then look like if someone wants to hedge against this temporary surge?
I think, a temporary surge is one where I agree with you. Our preferred approach would be to put a few hedges in place. And there are a couple of different ways to do it, right? Number one is to look for asset classes that are highly correlated to oil prices. The answer will be a little bit different. Obviously, what's available, what provides that sort of hedge in onshore markets will be different to global markets. Globally, for example, we've looked at U.S. energy sector as one sort of sector providing some correlation to oil prices, or inflation-protected bonds, which is really sort of the longer-term route through which risk could feed through to financial markets. But there's a broader universe of hedges outside of equities as well, right? So there's the obvious one, which is gold. We like gold for a variety of reasons, and I think it's done well, because of the broader geopolitical picture, because of central bank demand, and we're seeing that's benefiting to some degree, and that we still think is an attractive, part of multi-asset portfolios. And then, of course, you have a handful of, potential safe havens in currency markets. And again, the challenge is this is not something that we'll see a big reaction today. This is, what we experienced today has been building for some time, and I think that's what's being reflected in market. But these are the universe of safe havens at least we look towards if someone's looking to build some hedges today.
Okay. So, Manpreet, then from here on, I think the key question is, any indications that you are factoring in when it comes to the length of the conflict, number one? And two, when you're talking about crude impact as well, you're looking at production, you're looking at storage, you're looking at shipping, and all of this, if the Strait of Hormuz shuts down, how are you baking in, those estimates?
I think the challenge here, of course, is we don't have to be geopolitical forecasters, but of course, our focus is very much on financial markets. And I think that is why we're thinking through more a scenario-based analysis rather than trying to, focus excessively on just one scenario or the other at this stage. And look, if you think about it, the length of any disruption is really the key here more than anything else. Because to your point, yes, we're thinking about the entire supply chain from, actually output of oil, but also getting it, to the end consumers. Straits of Hormuz is one potential choke point, but there are others as well. But there are many, many sources of supply globally, and the context is still one, in our view, of a heavily oversupplied market at a global level. So that's why, to us, it's really trying to get any indicators that help gauge how long any near-term disruptions might last. Obviously, you see mixed reports around what's happening in Straits of Hormuz, but that's natural in these sort of periods of uncertainty. For us as investors, the question we ask ourselves is, what do we do about it, given, we would anticipate quite a bit of uncertainty. And sitting here today, we think the right answer is not to touch long-term core portfolio allocations, but instead think in terms of hedges. That appears prudent at this point in time because it is a situation that can change rapidly, into either of any of the three scenarios we've laid out. We think that's a more prudent approach, particularly given the starting point, rather than swinging to, expecting either a worst case or a best case scenario at either extreme quite at this stage.
Manpreet, just wondering, the conflicting reports and understanding of what really is the quantum of debris, drone strikes, etc., happening in the West Asia region. Do you think that becomes the key concern from an Indian market's perspective as well, apart from everything that is going on between Iran, Israel, and that part of it? But this GCC area getting impacted is what is giving jitters to global markets and asset classes?
Well, I think this is where it helps sort of step back and sort of get the perspective of what we know from market impacts of geopolitical conflicts throughout market history, right? Because what you described is natural, right? At the start of any geopolitical event, it's usually a short-lived and more sentiment-driven reaction, and one that's driven by a wide range of headlines. But I think what's important as investors, obviously, try to look through that to some degree and say, look, where could the impact be a little bit more long-lasting or not? And I think that's sort of the separation we're trying to do. And I think, look, no doubting that, from an Indian, perspective, of course, energy supplies matter for external balances, for the rupee, for obviously input costs, for inflation, as it does for many other, oil importing economies. But, as you can see from the oil price reaction, there is some reaction, but it's not sort of, been perhaps as large as some of the fears or extreme views were over the weekend. So at the end of it, it comes back to a broader point that I think the cooler-headed approach here is to try and separate what we see in the headlines, recognizing there will be some short-term sentiment-related impact on markets, as there generally is in most geopolitical events, but try and separate that from what the demand-supply pictures likely look like on a more trend level. And that comes back to the point why we think putting some, oil price hedges in place, broader sort of, safe haven hedges in place, that we think is the prudent approach at this point in time. And beyond that, obviously, our framework is to keep this various scenarios in mind. I think that's the best tool for investors to obviously monitor incoming developments and see, which of the scenarios we appear to be moving in favor of.
Stay safe, Manpreet. I know you're in Dubai, and like I said, we're getting conflicting reports. I assume things are settling down right now since we're doing this conversation, and
Right.
we wish you well.